Thanks for the invitation to speak. I have a lot of stuff I could talk about, but I'm going to try and make this as efficient as we possibly can. I'll give you an overview of the crop markets today. I do want to start with some of the major things that are really impacting the three big commodities, corn, soybeans, and wheat, in particular corn and beans, because right now corn and beans are really driving the marketplace. And a lot of attention right now is focused on China and Chinese purchases. I get a lot of questions about, is this, what's the driving force behind that? And I can assure you, based off of everything that I have seen, what I've read, what's happening in the marketplace, the way that Chinese are buying and the systems that they're using, this is solid underlying demand. Okay, so yes, the phase one agreement is helping. There's components to that are allowing U.S. ag products to enter the Chinese market a lot easier than they did before, which is helping kind of take out the speed bumps, making it easier to trade. But the real driving force behind this is the feed demand. And that's not only for soybean and soybean meal, also for corn, and also for barley. And I'm going to talk a little bit about the feed barley market and what's going on in Canada as I get towards the end of my discussion. But there's also buying a lot of sorghum, both U.S. sorghum as well as other globally. So this is really the driving force, the kind of the spark that has relit the marketplace. Add on top of that, there's been some concern about what's going on in South America with their yields, yield potential and weather. I'll just touch on that a little bit, primarily impacting corn and soybeans, a little bit in the wheat market. I want to be careful. I know that most of you don't grow corn or soybeans in that particular area of the state, which is fine, but you do have to understand what happens, in particular in the corn market, has a pretty large impact on what's happening in wheat, especially today because of the higher prices. We do have the outside investment community has come in and started gaining more interest in both corn and soybeans as we've seen more price recovery, a lot more volatility. I am watching that very closely because I do think this will add to the volatility in the marketplace. I'm going to focus most of my talk or discussion about what's happening in old crop, the old crop markets, the grain that's currently in the bin. But I do want to talk about that connection now back into the 2021 planting season, because we're going to be having this debate about how many acres are going to get seeded what crop, not only nationally, but also more importantly, what's going on in the state of North Dakota. So in summary, the battle for acres is back. And in my opinion, this could get actually very interesting. And unfortunately, there's a lot of moving parts. It's going to get hard to start piecemealing or separating out what all this means. So let me just jump into corn. I'm going to have just a brief review of what's going on in the corn market, again, primarily because of that linkage between corn and wheat in the feeding sector. So what's happening right now, if you've noticed especially the spring wheat market, but to some degree the winter wheat markets, the rally that we're seeing in the spring wheat or the wheat complex, a lot of that is driven by the increase in corn prices. And so essentially what's happening is that the wheat has to keep a premium to corn in order to prevent that high quality milling wheat to ending up in an animal feed ration someplace. So as you go through this, kind of keep that in the back of your mind. We did get some new updated USDA forecast yesterday in the WASDE report, World Agricultural Supply Demand Estimates. The number in the very bottom right-hand corner, I just want you to focus on that for just a minute. That number did go down a little bit, but it didn't from the January estimate, but it didn't go down as much as what the trade was expecting. And I'll talk a little bit about the reason and rationale for that in just a minute. So if you look in that little thought bubble, the 1.39 billion bushels as ending stocks, that's what the trade was expecting to see. Yes, USDA did lower their forecast for ending stocks, but not as much as we had expected. So that bottom line is a forecasted number. We're trying to figure out how many bushels do we think we'll have in the bin just before harvest of next year. And that number kind of becomes important because it sets the stage for balancing this, again, old crop and new crop pricing that's going on. So to look at that a little bit differently, this is information again on corn. I want you to really focus in on those blue bars on the bottom. Those blue bars represent the stocks to use ratio, and it's scaled on the far right-hand side of this graphic. The stocks to use ratios, think about as our ending stocks divided by total use. So what percentage of our needs will be in reserve just in case there's a problem next year? Okay, so what happens is as those ending stocks numbers become lower, as this stocks to use ratio gets smaller, two things happen. Average prices start to increase and prices become a lot more volatile, a lot more sensitive, because we're less certain about not only what's in the supply chain, but how quickly are we burning through our reserves. So if you compare those blue bars on the bottom and the red bar on the far right-hand side is the current forecast from the February report yesterday. Notice that we're taking our corn inventories down. Okay, and there's a lot of reasons for that, but they're not really at critical levels yet. What I usually say is a 10% stocks to use ratio is where the corn market starts to get nervous. That's kind of the tipping point. If these carryover stocks are above 10%, the market feels pretty comfortable. If it's below 10%, they start getting pretty nervous. So you can see that we're not anywhere near the record lows that we saw back in 1996, 97. They're not even as low as the levels we saw in that 2012 or 2011, 2012, 2013 timeframe when we had much higher commodity prices. But we are getting to the point where the market's getting kind of nervous. So the question is, what's driving all of that? And it's really the consumption portion. We have the production numbers pretty much dialed in right now. So now it's all about how quickly are we burning through our 2021 or our 2020 inventories, old crop inventories. The blue line on the top represents, technically it's feed and residuals. So just for simplicity, think about that's the amount of corn going into the livestock sector. The red line is the amount of corn going into the ethanol sector, used for ethanol production. The black line is exports, and then the green line is everything else. That's seed and other non-ethanol industrial use. The little dotted lines on the far right-hand edge are the current USDA forecasts. So please remember, when we're talking about corn, the two biggest uses are feed and ethanol. Okay, exports are important, but it's a kind of a smaller piece of the pie. But we've been talking about the export market very heavily in the grain industry right now. And the reason is because our corn exports have been surprisingly strong, primarily because of Chinese purchases. So if you look at that little dotted line in the black, that is a record export pace. If USDA is correct, I think they are. In fact, there's some private analysts saying it might be even larger. This would be our record corn export season. Now, this increase in corn exports is really helping offset a reduction in ethanol. Okay, and this is really what's driving what I'm a little bit concerned about might put a top end on how high can corn prices go. If we look at how much ethanol is produced every week, so the blue line running through this, and this is historical information, Department of Energy tracks how many 1,000 barrels, or think about it as gallons, of ethanol is produced each week. Notice we had a pretty rapid drop in the early part of 2020. That was when we had the stay-at-home orders because of COVID-19. We started shutting down our economy. We did that for a relatively short period of time and then started reopening the economy. Well, as we reopened, the miles driven, the amount of gasoline we were consuming started to rebound. But notice it didn't rebound to the levels we saw before the COVID shutdown. And that's one of the things right now driving the ethanol market is we're not driving as many miles. We're not burning up as much gasoline. So profit margins in the ethanol sector are very, very tight right now. So as corn prices go up, it puts additional pressure on the ethanol industry. And I'm beginning to question, okay, how long will it take before some of these ethanol plants slow down their production levels or actually go to what they call hot idle, which means that the plant is still running, but they just at really minimum levels. Most of the excitement in the corn market's been driven by the export market, the export pace. Normally, our number one and number two customers, normally our top customers for US corn are Mexico and Japan, and they're buying corn basically on that regular pace that we would normally see. So even though we've seen an increase in corn prices, Mexico and Japan are again, big customers, have been buying corn. They haven't backed off at all. The big surprise has been this rapid increase in exports to China. So if you look about halfway down this table, you'll see that the column on the far right-hand side is the amount of corn exports. These are contracts either that have been fulfilled and delivered or contracts that have yet to be delivered. So these are forward bids from September 1 through the end of January. It's the most recent information we have. Tomorrow we'll get some updated numbers. The moral of the story is we're only about 5 months into the crop marketing year for 2020, 2021. So that column on the far right-hand side shows a 5-month total. All of the other numbers on this table show a 12-month total. So based on today's ranking, China is our #1 corn buyer by far. And not only within this first 5-month time period, but even going back historically, these are some very high levels, record levels of exports to China. And as I said before, most of that, the vast majority of that is driven by the very strong demand base for animal feed in China. Okay, now China doesn't have to buy corn from the US. There's other countries that will export large volumes. So we got to be a little bit careful as US corn prices go up, how long will we be competitive in the global market? So if we look at who are the big corn exporters, the United States is the biggest producer as well as exporter of corn in the globe. Brazil, as far as an exporter, is #2, closely followed by Argentina. Now, a kind of a newcomer to the corn export world is Ukraine. Usually when we talk about Ukraine, we're thinking about wheat. Well, Ukraine has been shifting some of their cropland acres out of wheat and into corn and corn exports. Okay, so I do have access to corn export bids. So what this is like the bid sheet from your local elevator saying, well, here's the price if you'll deliver today. If you're to sell today and deliver sometime in the future, what would that price or price bid be? Okay, so this is the exact same concept, but in the global market. And what I tried to do is include the cost of the corn loaded onto a vessel, a ship, and delivered to North Asia. So this would be like an inbound price. So it would be the cost if I'm a buyer of corn in Japan or corn in China. So North Asia is usually Japan, China, and Korea. And I look for different destinations or different loading points. So if you look at the black line, which is Ukraine, the red line is Brazil, the green line is US Gulf, the Gulf of Mexico, and the blue line is US PNW. Okay, so if I'm a buyer of corn in the global market and I live in North Asia, here's kind of the prices that I would be offered for delivery at these different time periods. Now, if you look at that graphic, if you notice the US, both US Gulf as well as US PNW are pretty competitive, not only with basically even with Ukraine, but we're actually cheaper than Brazil until we get into that June timeframe. By the time we switch from May delivery to a June delivery, all of a sudden now Brazil starts to become lower priced. What this is signaling to me is that I do think China, as well as other North Asia countries, will have very strong demand for US corn into probably spring planting. And by then, we're going to have to wait to see. It's open for debate whether they'll continue to buy from the US or start shifting to Brazilian supplies. So I think our window of opportunity for corn exports will be good for a couple more months, and then we're going to have to wait to see what happens next. When we talk about soybeans, and a lot of activity in the soybean market, and most of it is driven by a return of exports. So if we look to the bottom line and what USDA is forecasting for carryover, for how many bushels are we going to have left in the system just before harvest, these are exceptionally low numbers. And actually, when USDA came out yesterday, they came out very, very close with what the trade was expecting to see. Okay. So if we look at this graphically, again, the blue bars on the bottom is that stocks to use ratio. It's the same principle as corn. We're taking ending stocks divided by total use. So if we look at the little red bar on the far right-hand side of this graph and compare it to the record low levels we had in 2012, they're identical. So remember what I said before, as these ending stocks, as stocks to use ratio gets smaller and smaller, prices tend to go higher and become more volatile. They bounce around a lot more, not only on the upside, but also on the downside. They change more and more from day to day and week to week. And this is really what's driving now a lot of discussions about what do we need to do in 2021? How many acres of what crop are going to be planted? The other thing I want to remind everybody is the oilseed complex is really closely linked. So what happens in the soybean market has a pretty big impact on what happens in canola as well as sunflower. And I'm going to come back to these rising canola prices in just a few minutes. So again, just remember there's a linkage here. They're both oil seeds. When we look at how do we use up soybeans, two big uses. We have domestic crushing, which is the blue line, as well as exports. Before I jump into exports, I just want to remind everybody, domestic crushing is a big market segment. About half of all the soybeans are crushed into oil and meal. Some of that hits the international market. A lot of it stays domestically. Crushing profits, the profitability for the crush industry has been very strong. Unlike ethanol, which margins have been really tight, soybean crushers have been doing very well over the last 12 plus months. Now, margins are starting to tighten up a little bit now because of higher soybean prices, but they have been very strong up until this point. The big story in soybeans, as well as oilseeds in general, is the return of China. Okay, so yes, we had the trade war between U.S. and China. We've have the phase 1 agreement now that's helped resolve some of those issues, not all of them, some of them. And China's back in the market buying U.S. soybeans, and they're buying them in it with a vengeance. So when you look at USDA forecasts for total export sales over the full year, even though we're only about 5 months into it, we're looking at record levels, record export levels. Again, I want to focus in on that column on the far right-hand side. This is the amount of soybeans that have been sold either under contract or actually delivered in the first 5 months of our marketing year. All of the other numbers on the table are 12 months totals. The surprise to everybody is that number in the top right-hand corner, which is China. We did expect China to come in and buy some more U.S. soybeans, more like historical levels, but we did not expect these very large numbers. So right now, China is on pace to have a record purchasing season for U.S. soybeans. If you track to the bottom right-hand corner, we've already set a new record. Even though we're only 5 months into the marketing year, we've set a new record for soybean exports. The previous record was back in 2016-17. So again, major driving force behind this is Chinese purchases. Now, the one thing you got to remember about soybeans, which is very different from corn and wheat, is our soybean export season is very short. We really only sell and deliver soybeans for about 6 months out of the year. And we're getting very close to the kind of that tail end of this marketing or sales season in the global market. As Brazil starts to buy or starts to harvest, and prices in Brazil are lower, they start to dominate the global market. So this graphic just shows this really seasonal behavior. And again, as we get into this February and in particular March timeframe, our export sales and export shipments start dropping off very quickly. So this is all soybean exports. This graphic is for China sales only. And one question I often get is, well, just because China has bought the beans, how much of that has actually been delivered? Well, based on the information we've had, as of last week, there's only about 5% of all of their purchases have not been delivered yet. And in my personal opinion, I think those 5% will be delivered on. I don't think China has not been canceling orders. And again, they're not, they can play some games once in a while, but this demand base, their need for soybeans and for corn is legitimate. Okay. We're not the only country, obviously, that sells soybeans in the global market. Brazil is actually a larger producer and larger exporter of soybeans than the United States is. Okay, part of that is the acreage, and part of it is the crushing industry in Brazil is a little bit smaller than it is in the U.S. Now, Argentina is very different. Even though they're a very large producer of soybeans, they usually crush their soybean into oil and meal and export the oil and meal. So if we're looking at whole soybeans, unprocessed soybeans, in particular that China market, Argentina is kind of a small player. They again, because of their internal tax structure, they crush it first before exporting it. So let's look at the export bids as of yesterday. Now, again, these are numbers as of yesterday. The red line is Brazil. Prices again delivered at different time points into the future into North Asia. The black line is Argentina bids. The green line is U.S. Gulf, and the blue line is U.S. PNW. So right now, today, for the next foreseeable future, Brazil and Argentina have better export bids than the U.S. does for soybeans. Now, that little bump, that little pop that we saw in May, that just showed up yesterday. I did this for a couple days ago, and it was basically a flat line, and all of a sudden this May delivery popped up at a higher price. So I do think that there's some buyers in the global market, in particular China, that are because of some delays in delivery, they're getting concerned and they're doing heavier bidding for that May delivery window. So my point is, this is just confirming that, you know, for US soybeans, I think our export season is coming to a close pretty quickly. It's not to say it'll stop. It's not going to reach zero, but it's going to slow down significantly. Now let's finally get to wheat. Finally, the interesting stuff. Now, the wheat supply demand, this is all wheat, all classes blended together. It really didn't change. The wheat numbers for old crop wheat didn't change at all based on USDA forecasts. When we look at ending stocks for all classes of wheat, this is the big difference. We're not tight, or we don't have limited supplies of wheat in the US. We've got plenty around. And that's one of the things, one of the reasons that the wheat market and the wheat complex, when you look at the different classes, has been kind of slow to respond to these increasing corn and soybean prices. How do we use up US wheat? Again, this is all wheat now. The blue line is food. Would think about that as domestic milling. The red line is exports. And then the black line is feed. And then we have a seed line. Now that feed component obviously is the connection between corn prices and wheat prices. And most of you guys think about beef and saying, well, gee, you're not going to flip a beef ration from corn into wheat very quickly. And that's true. You got to transition it. And there are some feedlots in Western Kansas now that are starting looking at more wheat inclusion in their feeding rations. But I want to remind you, that's not the only livestock species you have. And poultry, especially broilers, can switch very quickly. A broiler or a chicken is a monogastric, so it can eat one thing in the morning and something else in the afternoon. So this flipping between corn and wheat can happen a lot faster than I think some people first realized. I want to talk a little bit about this, the red line that bounces around, because this is important as we move forward. Notice that it looks like our exports are starting to stabilize, which is kind of a good thing, but yet it's not really a good thing, because what's happening is we're losing some market share to the Black Sea. So those spikes that we see going back into the early 2000s and mid 2000s, those pops up and down, is when we had really good supplies of wheat prices dropped, and we're able to get rid of our extra wheat, the excess wheat. If we had a really good production year, we were able to get it into markets like Egypt and North Africa and the Middle East, because those buyers are very, very price sensitive buyers. So if we could get our wheat prices low enough, we could get rid of our excess supplies, and then prices would rebound. Well, the problem is a lot of those countries, Egypt, North Africa, and Middle East, are now buying their wheat from Russia or Ukraine, not buying it from the US. We're having a very difficult time getting US, especially winter wheat, into those markets. So what that's done is it's really left us with those very traditional buyers of wheat from the United States. And those traditional buyers are very regular in their purchases. Regardless of price, they tend to buy about the same amount every year. Okay, and that's one of the reasons we're seeing this stabilize. So when we look at who do we sell wheat to, Mexico, Philippines, and Japan are the three top countries. Now, again, this is all wheat blended together. There are some preferences. For example, Mexico kind of has a preference for the hard red winter wheats, or soft red winter wheats, because the protein we have up here in the northern tier with our spring wheat is a little bit too hot for the kinds of breads and bread products they like to make in Mexico. Okay, Now, if you drop down to China, China has come in and bought some US wheat, mostly hard red winter wheat, a little bit of white wheat, mostly hard red winter wheat. Not much spring wheat yet. And I'll talk about that in just a moment. So yes, China's buying some US spring wheat or US wheat in general, but these are a long ways from the record levels we've seen historically. So the purchases we've seen so far on the far right-hand column, the amount of sales for wheat so far this marketing year has been normal, been very typical. We do have competition. Russia is now the largest exporter of wheat on the globe. The United States as a single country is number 2. Okay, now look at that list. Now I'm going to throw out European Union for just a minute, but if you look at Russia, which exports a class of wheat very similar to our hard red winter wheat. United States, that's multiple classes. It's both spring wheat and winter wheat. Canada, again, primarily spring wheat, some durum. Ukraine, the next door neighbor to Russia, is primarily something we would call a hard red winter wheat. Okay, so winter wheat has been a challenge for us, and these are export bids to North Asia, like I said, going into Japan or Korea or China for hard red winter wheats. This would be the proteins for hard red winter wheats. Now, there is a black line, believe it or not, there is a black line on this graphic, but it's tucked right behind the red one, which is Russia. So the Ukrainian price and the Russian price are identical. They're following each other. Notice the green line, which is the US Gulf. That would be for hard red winter wheat. Delivered to North Asia, we're not quite there. Even at this point of the game, both Ukraine and Russia have better prices competitive prices in the global market. I wanted to show this for a particular reason. You may have heard that Russia and the Russian government now are starting to put on export taxes, that they've been exporting so much of their wheat that domestic wheat prices are starting to rise, and they're worried about food inflation within their own country. So starting on some of those tariffs, the export tariffs, so actually the government is tariffing or putting a tax on the exports. Some of those tariffs have already been in place, but starting on June 2nd, they're going to put in a permanent tariff policy. And that tariff policy for exports is going to vary depending upon what's going on in the global market. So if global prices go higher, the tariff rate is going to go higher. If global prices drop, the tariff rate's going to drop. So this is a new formula they just came up with, and there's a lot of international buyers now trying to figure out, so what does that mean for Russian wheat prices, and especially for trying to purchase or lock in a price for delivery a long time into the future. So this is a developing story. We don't have all of the details yet. Let's shift to spring wheat. Again, US spring wheat supplies, when we look at carryover stocks, they're very comfortable. We had a pretty good spring wheat crop this year. Quality was pretty good. And actually, again, when you look at carryover stocks, we're at about 40% carryover. I usually say for spring wheat, typical for spring wheat is about 30 to 35%. So we're a little bit on the strong side. The other thing is Canada also had a pretty good year. They had a pretty good production year. Quality was pretty good. Now their exports have been a little bit stronger than they were last year, which is helping take some of the Canadian spring wheat inventories down. But if you look at the production long-term over the last several years, the green bars being the US bushels, the gold bars being Canadian bushels, we're having typical production years, but we're having in the US a little bit more of a challenge trying to get into those export markets. How do we use up spring wheat? Again, the blue line is domestic milling. It does bounce around a little bit from year to year. The red line is exports. We're looking at the USDA is forecasting a slight uptick in US exports. We'll have to wait to see. Black line, we usually don't feed a lot of spring wheat. And then we've got the seed category. So who do we sell spring wheat to? The reason I wanted to show that before is domestic milling is about half of our consumption. The international exports is about half of our consumption. Domestic milling, the amount they use tends to be very stable and flat from year to year. The uncertainty, the unknowns come in the export market. Our number one export customer, and has been for several years, is actually the Philippines. Now this is spring wheat specifically. Number 2 is Japan. Number 3 is Taiwan. Number 4 is South Korea. those Asian markets. Okay. Now, the export pace, the amount we've been able to sell is typical. It's very average. It's very normal. There's been no surprises. If you look at the China row towards the bottom, yes, China has bought a little bit, but again, not a lot. They have not been a big buyer of US spring wheat. They've been buying some Canadian spring wheat, but not US spring wheat. We'll wait to see. And I have this sneaky suspicion, I think by mid-February or early March, this is my personal opinion. I do think China will come in and buy a little bit of spring wheat, but we'll have to wait to see. So what does all this mean? I'm going to try this, tie this together, and hopefully be done without too much overrun on my time. So US exports so far, which is kind of our big unknown in the marketplace, have been typical. So there's not been any shock value. So most of the driving force behind spring wheat prices have been what's happening in corn and soybeans. When we think about 2021 spring plantings, so now we get into this battle for acres. I do think we're going to see an increase in soybean as well as increase in corn acres in North Dakota in 2021. The real question is how many? And more importantly, where are those acres going to come from? So if we think about spring wheat plantings, they will likely be lower. Okay. The question is how much lower? And the other question I have is, okay, so who will shift those acres? When we look at the spring wheat production region of North Dakota, Montana, and Minnesota, which of those acres are going to start getting flipped around? Now, they may not be in your area. We may not see a big adjustment in acreage in your growing region, but I do think as you get further east, we're going to start to see spring wheat acres shifting into other crops like soybeans, like canola, and possibly some corn. The other thing I want to point out, now you got to get your thinking cap on, because as I see it, old crop pricing and new crop pricing are going to be different. You're going to start to see this separation in the spring wheat market. We've already seen it appear in corn and soybeans. Old crop corn and old crop soybean prices are much higher than the new crop bids for 2021 acreage. The opposite is happening in spring wheat. When we look at new crop versus old crop, new crop prices are actually a little higher. And I do expect, in order to hold enough acres that we don't get too much shifting going on, the new crop spring wheat prices are going to have to increase to try and hold those acres. So watch for that. As we move forward in time, watch for that to start to happen. When we look on the Canadian side, just as a reminder, approximately 70 to 75% of the Canadian spring wheat is exported. So far in marketing year 2021, the Canadian marketing year, their exports have actually been relatively strong, much stronger than we saw this time last year. And China has been buying some spring wheat from Canada. And right now, China is the #1 buyer of Canadian spring wheat. So when you look at, now they're again only a few months into the marketing year, but China's been a little bit more aggressive. They have been selling into Indonesia, Peru, as well as Nigeria. Now, Statistics Canada has started coming out with their forecast for the 2021-22 marketing year. Their initial forecasts are looking for a slight increase in spring wheat seedings. However, when I listen to some of the private analysts in Canada that try and do their own forecasting, they're actually looking for a lower spring wheat seedings. And one of them that I saw was up to a 5% reduction, which would be pretty significant, to be honest with you. The reason there's this differential in argument that the private guys versus what Stats Canada is forecasting, I think really comes down to their assumptions about feed barley demand and canola prices. Now let's talk about feed barley for just a minute. We don't grow a lot of feed barley in the US. Almost all the barley we grow is contracted for malt. But in Canada, they have a pretty large and robust feed barley market. Okay. China, several months ago, I think 6 or 7 months ago, they got into a trade war with Australia, put huge import tariffs, about 80% import tariff on Australian feed barley. So because of this big feed demand, now China's looking around the globe for where else can we get some alternative feed barley supplies? Well, there's only a handful of countries globally that will export feed barley, and Canada is one of those. So Canadian feed barley exports have surged primarily because of Chinese buying. China is also coming back in and buying more, or return to the market and buying a lot of Canadian canola. So canola prices, as well as canola ending stocks, are very tight in Canada right now. And if you've watched what's going on in the canola market, we've got some very, very strong canola prices, especially old crop. The new crop prices aren't quite as high. They haven't risen as quickly. But when you do the math on what's going to happen in Canada in 2021, you know, spring wheat might have a more difficult time holding acres than we first expect. Again, because of the higher feed barley prices, but higher canola prices. Let's talk about durum. I know I'm running over a little bit. I apologize. We're already late. Durum inventories. Now, I don't want to press USDA's numbers on durum and durum inventories very hard, because it's a very specialized market. It's really hard to get solid information. So, you know, these are reference points. I'm not going to push this too hard. Ending stocks, the current forecast on durum is relatively tight. It's also relatively tight in Canada. So even though durum, and I'll show you a graphic in a minute, Canada produces a lot more durum than we do here in the States, their inventories are also starting to get a little bit tighter than we had first expected. The difference, now notice the green line is total production, the red line is total use. So you got to make up that difference through imports. And yes, we do import durum from Canada, but I will assure you that Canada's #1 export destination is not the United States. We rank about 6 or 7 on the list. There's other countries that that they export to, and actually are buy larger quantities. So when we look at total production, last year the durum acres in Canada went up. Their yields also were higher than average, so they had a very good durum year. When we look at the amount, and this is in bushels now, the amount of durum we produce in the States versus what we do in Canada, you know, Canada's kind of the 800-pound gorilla. When we look at how do we use up US durum, about 70 to 75% of our US durum stays domestic. It's used for pasta production primarily. We do export a little bit, you know, 25%-ish. But, and again, it varies significantly from year to year. We have seed use, and they've got the feed and residual number. So let's talk really quick. What's going on in the US? If I go back a little bit, notice that we've had an uptick in, especially this last year, in USDA's forecast for durum consumption. A lot of that is because pasta demand in the United States, because of COVID-19, is very strong right now. The question we have is, how long will that last? My personal opinion is I think it will be strong through at least through the 2020 marketing year, the current one, and probably also spill over into next marketing year. So I don't think that pasta demand will drop off very quickly. What about durum seedings? My best guess right now, it will either be unchanged to slightly lower. And again, we got to watch that spring wheat durum price relationship, which I know you guys follow very closely, to try and say, okay, you know, do I start shifting acres around or not? And depending upon who you talk to, some of them will shift into spring wheat, some of them will hold their durum acres. We also need to talk about Canadian durum plantings. And this is where I want to remind everybody, approximately 85% of Canadian durum is exported. So the export market for Canadian durum is critical. Their big buyers, Italy, Morocco, Algeria, and Belgium. And that's been the list, that it continues to be the list now in 2020, the current marketing year. Stats Canada is forecasting a 5% increase in durum acres, but a lot of the private guys are looking for a slight, either stable or a slight decrease. And again, I come back to that strong feed barley demand and competition for acres there, as well as the strong canola demand. Whew, I made it. So I will stay now and see if there are any questions. Looks like there's a few that came into the chat box here.
Sure. Why don't you go ahead and take those, Frayne? I'll see if there's any here in the room.
Okay, very good. So 600,000 Canadian spring wheat sold to COFCO the last few days, supposedly. Not mention, don't mention my name, please, and I won't. But that is also the surprise, that when you look at the Canadian exports, because the Canadian Grain Commission keeps track of that on a monthly basis. China has been buying a pretty big chunks of Canadian spring wheat. And so my question again is, how long will that last? I think there's an appetite in China for North American spring wheat. The real issue is, do they buy it from Canada, or do they buy it from the US? And I got this sneaky suspicion personally, this is just my gut telling me, I think we might see after the Chinese New Year, they might start shifting to some US supplies.
Okay, I'm gonna cut in here. Oh,
Okay.
can I cut in here, Frayne, with one from the room?
Sure.
Does Ukraine plant soybeans?
Yes, they do. And in fact, southern Russia is also increasing both their corn and soybean plantings. Now, some of the soybeans in Ukraine actually don't get exported through the Black Sea. They actually get delivered internally into Western Europe. It's not big acreage, you know, so they're not like a major exporter, but their soybean acres are starting to increase. One question on ARC and PLC. I haven't studied the ARC and PLC sign up issues. I just haven't had time. Too many other things going on. So I apologize. I have no comment.
I got another one here in the room.
Sure.
Is the increase in the Chinese importing, is that due partly probably to the COVID because they are not producing as much at home, or they're worried about their food supply, or what do you think?
Well, it's really driven by the rebuilding of their hog herd. Remember, there's that African swine fever about the time that we started into this big trade war between the US and China. China also had that African swine fever. Well, the reduction in their hog herd from the peak before that to the low point, that reduction is 2 times the size of the US hog herd. That was just their cutback. Now they're rebuilding, and they're almost back from a hog numbers standpoint, from a herd size standpoint. They're almost back to those pre-African swine fever numbers. So in the last 12 to 18 months, China has added 2 times the size of the US hog herd. And they haven't really cut back on the expansion that resulted from the poultry industry, the dairy industry, and the aquaculture industry in China. Because when hog prices went nuts or pork prices went high, they expanded poultry and aquaculture and dairy to get the animal protein. And those industries have not cut back yet. So it really isn't a COVID related issue. It's more African swine fever and rebuilding their hog herd.
Do you have any more questions in the chat, Frayne?
I didn't see anything come in, no.
I see one here. Any additional comments on the recent Russian wheat export tariffs and how they may impact US exports?
Yeah, really good question. So there's a flat tariff rate up until the first part of June, and it's a pretty substantial rate. So I do think we'll start to see some more nibbling of US winter wheat sales, okay, because of the relative pricing. The weird thing about that variable rate is that they're still working on the formula. We're still trying to figure out exactly how they're going to implement this starting June 2nd. It's going to make, because it's a variable rate, they're going to announce the tariff rate on the Friday, the last business day of the week, and that tariff rate will apply for the next week. Okay, and then after that week, they're going to readjust it and recalculate, and then they'll announce the tariff for the following week. What that means is it's going to be very, very difficult for companies, for the exporting companies in Russia, to figure out, how do I bid a price for the delivery into the global market 3 or 4 or 5 months into the future? because I don't know what that tax or tariff rate's going to be. So I think what we're going to see is those bids, those forward bids for Russian delivery, for delivery of Russian wheat into the global market, get very, very short. You might be able to get 1 or 2 months forward, and that'll be about it, because it's too high risk not knowing what this tariff rate's going to do. So I think it's going to have longer term a pretty substantial impact on the way that Russia sells their wheat into the global market.